Bangalore-based Juspay has raised $60 million in its Series D round, led by private equity giant Kedaara Capital. The round saw continued backing from existing investors SoftBank and Axel, underscoring strong investor confidence in Juspay's global vision. Known for empowering enterprise-grade payment infrastructure, Juspay is scaling its open-source orchestration platform across markets in Asia-Pacific, Latin America, Europe, and beyond. With this fresh infusion, the company plans to further enhance its AI capabilities and deliver next-gen solutions for merchants and financial institutions worldwide. Joining me now to discuss this further, Sheetal Lalwani, the co-founder of Juspay. Sheetal, thank you so much for taking time out and being here with us on Startup Street. First of all, congratulations on the fundraise. You've raised funds after 2 to 3 years. So how will the $60 million Series D funding be allocated for growth?
See, the fundraise was predominantly for a couple of reasons. One was to give some of our existing investors an exit who've been with us for a long time. It's a partial exit. But primarily, the infusion into the company was for our growth plans around international expansion and open source and bank infrastructure. That's predominantly how we are looking to invest this new capital, which we have raised.
Right, so providing exits there for some of your investors. You were last valued at $460 million. So with this fundraise, what are you valued at now? Now that you'll have achieved the unicorn status, what's the next milestone?
See, these are all outcomes. Unicorn status is a outcome, was never a milestone per se for us. If you really have to answer, what are we excited about going forward? See, we want to establish being a global company. A world-class tech company building great payments infrastructure built out of Bangalore. I think that's what we are excited about. We are excited about, can we achieve $1 billion in net revenues? When you look outside, there's a lot of companies who do good tech just like us and are clocking really good revenues. And I think that's what's exciting us, being a global company, solving for digital payments infrastructure out of Bangalore.
So you've got that $1 billion dream, but also you want to build from Bangalore for the world, right? So if you could tell us a little bit about your global expansion plans, which geographies are doing well for you? Are you eyeing newer geographies as well?
Yes. We started investing in our international expansion more than 3 years back. We now have offices in 4 countries outside of India, right? Singapore, Dublin, Sao Paulo, and in San Mateo in California, right? And we are going to deploy more funds into setting up a base in these countries, right? International expansion is going to be a primary place of new investment for us. Also, there's this big tsunami wave which has already hit us, with AI. We'll have to invest a lot in AI fundamentally, which is going to touch every role within the organization, but also it's going to also touch about how and what kind of products we're going to build for our e-commerce businesses, banks and fintechs and all of that, right? I think so. A big focus is also going to be in investing in AI for building the next set of our growth engines.
So as you just mentioned AI, right? Can you share specific use cases or areas where AI is already making an impact within your platform?
See, a lot of it is going to be firstly internal, right? Every role in any company is already affected by AI. We just have to make sure we are deriving the best out of AI, right? Can we improve our productivity 10x? Already we used to talk 10x, so 10x is like 100x. Could we do that, right? But what our merchants, what our clients are going to see is even the current products are going to be touched by AI, whether directly or indirectly, right? They may not even see AI the way you and I experience, like a chat or some interface, right? But the product itself, for example, features will get delivered much faster, right? There is going to be extreme amount of efficiency in how they interact with the systems, interact with people, interact with the products, right? All of that is going to be changing via AI. But also, there's going to be AI-first products and features which will come out into this, right? We are launching a couple of, AI-first products and features in the next couple of quarters.
So big focus there on AI. Now the funding also comes at a time when several major platforms, including Paytm, PhonePe, Razorpay and Cashfree, have ended their orchestration partnerships with Juspay, right? So how are you sort of recalibrating your product and go-to-market strategy in light of these shifts? And what steps are being taken to strengthen enterprise trust and long-term stickiness? And how will this impact your top line?
We've always been a software provider for our merchants, right? Merchants use us, and then they get to work with any PAs of their choice. Certain PAs have taken the call not to support orchestrators. It's not like we didn't have any tie-ups with them. They basically chose to say we will work only if there's a direct integration and not if you use a third-party route. So just clarifying that. But for the merchants who are using a Just Pay orchestration, there are multiple options available. And even a lot of these PAs also gave exemptions because these are large merchants and extensions, right? So there's not really been a major disruption or anything for our existing merchants. They had multiple other options, also banks. There are other PAs who have really stepped up and started supporting them. The path forward is, merchants continue to see orchestration is important. That's what I think has been a clear message to us also, to PAs and also from the merchants also, that orchestration is a very, very important aspect of how anyone would build their digital payments infrastructure going forward. They're working with PAs who support this kind of flexibility and also will take long-term moves like that. Furthermore, we've also open sourced, right? So merchants can now make it like their own software, right? We have merchants who are already contributing to open routers. So it's no longer just pay, right? It's not a black box or anything. It's an open source, open data. Merchants are taking it and adopting it, and they will make it their own software, and they'll work with any PA of their choice. Not something which is dictated by our integrations or our relationship, right? So the way forward is there's going to be a need for openness, transparency, and merchants are going to adopt what suits best for their needs, right? So yes, impacted in the sense we had to, in the sense like we've now accelerated our open source journey for India. We hadn't planned it that way. We had built Hyperswitch and open sourced it for US and Europe almost 2.5 years back, but we've accelerated, which means we had to do some work. Of course, merchants have also had to do some work in terms of either finding alternate partners or negotiating and understanding the impact of it, or some of them have chosen to take the open source router. So that's some additional work. So impacted in that way has been that there's been some additional work which probably was going to happen down the lane has been accelerated. We've been this thing, but in terms of revenues or dip in volumes, that's not been any material impact on our platform.
So no material impact there. But, coming to your numbers, right, your revenue from operations grew 49% to 319 crore rupees in FY24. And you managed to cut your losses by 7.8%. So if you could sort of take us through where you hope to end this year.
See, we are ending FY26. We are in the new financial year, right? We are expecting a similar kind of a growth. EBITDA we could maintain, but we actually have more aspirations to invest ahead in our international journey, in some of the open source journey. So that will define some of the EBITDA margins. Yeah, that's probably how we are looking at it in a way, right? We have the flexibility in how we invest capital, not just because we've raised capital, but also on a cash flow positive, EBITDA positive path. So we have a little bit more levers in terms, but we'll be opportunistic about it, right? We're not just going to go and invest or burn just because we have the capital or just because we are generating cash. We'll, as always in the last 10, 12 years of our journey, we've been very pragmatic. When we know there's something which we can make it work, that's when we go invest. But if we know we can really make it work big, we go big in investing there also, right? Like how we did with UPI for 4 years. There's almost no monetization, but we knew this was the right path when we started investing in it. So we'll continue that kind of a first principled approach in investing when we see those opportunities.
All right, Sheetal, thank you so much for taking time out and being here with us on Startup Street. But we're completely out of time, and we wish you all the best on this journey going forward. But with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.